Hello everybody, this is Eddie Ghabour. I wanted to send out this video today to really talk about this big week in regards to the Federal Reserve. The biggest concern the market has that the debate keeps going back and forth with all the talking heads on TV. I was just interviewed on national TV with my opinion on it, so I wanted to share it to all the everyday investors that follow me. And by the way, whatever questions you have, please send it to me in my inbox. I'll make sure I address it during the next video. So the big question and million-dollar question is, what is Chairman Powell going to say this week at Jackson Hole? Okay, Jackson Hole is a big meeting where all the feds get together and start laying out monetary policy for the rest of the year and what that may look like for the overall markets. The consensus right now seems to think that if the Federal Reserve decides to taper, and taper meaning reduce the amount of bond purchases that they're doing, that the market is going to fall apart and we'll have a huge drop in the markets. I happen to believe that that won't actually happen. Call me a contrarian by nature. But one thing you'll find many times in investing is the herd many times is wrong. And so sometimes going against consensus can be some of the most profitable things you can do. So why do I think that what the Fed's going to do is not going to really matter is when you take a step back as an investor and you assess risk and reward. Right now, the Federal Reserve is buying about $120 billion of bonds per month. So tapering means that they may only buy $100 billion. But let's again take a step back and think about what that means. They're still going to keep rates very low and not raise interest rates. And so if they go from buying $120 billion of bonds to $100 billion of bonds, is that really going to make that big of a material difference in the liquid markets to cause the market to go into a bear market? I personally don't believe that will happen. Matter of fact, I think right now is a golden opportunity for this Fed to go ahead and taper because everybody's expecting it, okay? And if they do taper, I think the language that we will see is they're going to make it so soft in language and let us know they're going to do this methodically and very slowly to not disrupt the capital markets. The last thing the Fed wants to do, no matter what they say, in my opinion, is to cause the stock market to have a huge drop because they make a misstep in regards to monetary policy. So I think this is the one time where we won't get a taper tantrum. Taper tantrum, we got that a few years ago where they decided to change some of their stance on monetary policy, and we saw a huge drop in the equity markets. So this time, I think consensus is wrong again because I think the market has already priced that in. You look at a lot of the cyclical stocks, you look at some of the small cap stocks, they've lost 10 to 20% of their value just since the month of June. So that is in anticipation because remember, a lot of times the market is forward looking. So the market's already priced in a more tighter Fed and tighter monetary policy, okay? So as an investor, not only do you need to assess your risk tolerance and assess your goals, even if the market drops by 3 or 4% over a few days because of the initial reaction to the Fed making their statement, I think ultimately what you will see happen is people are going to jump back into the equity markets because it's like the analogy of the best house in a bad neighborhood. Where else are you going to go for yield? I mean, you have the 10-year bond is under 1.5. You've got interest rates at banks for CDs and money market rates are very, very low. And I think that's why you've seen investors take more risk than they normally would because finding yield in this low interest rate market environment has become very, very challenging. Okay, so as I educate investors, especially new young investors, is the best thing I can tell you in this scenario is just ignore the noise. Focus on what your goals are. Because again, at the end of the day, I am a believer that the market always goes back to fundamentals. There are time periods where there is a disconnect where fundamentals aren't matching what the market's actually doing. But ultimately, fundamentals, in my opinion, always wins. So if you forget about what the talking heads are saying this week, and ask yourself this, if the Fed tells me that rates are going to stay at near zero and they're going to be buying $110 billion of bonds per month to keep the markets very liquid, and we are not in a recession, is that anything to be scared of? I personally don't think so, okay? So we'll have to wait and see if I'm right, but we're educating investors on the fact that it doesn't matter what the Fed does right now, okay? You have two dynamics that are causing this market to move. You got everyone worried about Chairman Powell and what his next move is going to be, and you have the Delta variant that everybody's concerned with. So let me paint something where the glass is half full. What if the Fed decides to taper, but they tell the market that we're not going to raise interest rates until next year? And we happen to peak in Delta cases sometime in August or September. Ultimately, if we get that, and there is a possibility or probability of that happening, that, in my opinion, would be extremely bullish, and why an individual investor should not make an emotional decision based on what the Fed is going to do on one particular day, okay? Because again, you have to look at what the implication would be of going from $120 billion of bonds down to 100. Not much has changed. It's still very loose monetary policy, which the market likes. You have companies sitting on a lot of cash and a lot of stock buybacks that I anticipate to happen over the next several months. And you got an economy that's still growing and it's not in a recession, okay? So time will tell. We'll have to wait and see what happens here. But the main point I want to send out to you is don't let 1 week of hype from a Fed affect your portfolio to the bias one side or another. Focus on fundamentals, focus on what's important to you, and focus on your goals, and that's a recipe for success. And doesn't matter what happens this week with the Fed. That's all I've got. Thank you for your time, and again, send me any questions that you have.